Hi guys, and welcome back to our channel here. Thank you for tuning in. Today I have Derick Brown, who is a CPA. I get lots and lots of questions on taxes here in Panama, and I know from a very, very high point of view how to answer some of them, but I like to defer to the professionals in many tax questions. So Derick here is going to help us go through a list of kind of frequently asked questions for those of you that are looking to purchase real estate in Panama. So Derick, thank you for coming today.
Thank you for having me.
Yeah, of course.
Appreciate it. Yeah, so we can start from, let's say, from the beginning. When somebody is looking to purchase in Panama, from an accounting or tax perspective, what should they be aware of? And it could be something as simple as doing a simple due diligence. Because what I've seen in the past is that investors buy a property, and then once they own it, then they look for an accountant. And then by that time, it's too late. Like, for example, fresh off of my mind, a couple weeks ago, I had a client that bought an apartment, a unit here, and the sale closed at the end of March.
Okay.
So when she came to our office, after she already purchased we met on the first week of April.
Okay.
When I was checking her property taxes, I noticed that the previous owner did not pay the property taxes for January, February, and March.
Ouch.
Which he owned the property then. So fortunately, I was able to explain it to her lawyer, and they were able to get refund for that, for those 3 months. But stuff like that, because in Panama, the reason that happened is because the property tax for the first quarter is paid on April 30th. So you can get a good standing certificate for the property in those 4 months. So because she didn't do a due diligence prior to, then she almost lost $3,000 or $4,000 in property taxes that were not her responsibility. So simple stuff like that, doing an initial due diligence of the property just to have an idea of what are your tax implications.
Perfect. I didn't even think about that, because the majority of what I do would be straight from a developer. I mean, we're handing it off without any former tax implications, but that's a really good, I didn't think about that. So I get this question a lot, and I assume you do too, but I believe it was 2019, like the entire real estate tax bracket was changed. And I'll get people that are like, oh, I heard I don't pay any taxes in Panama, or this, this property, like, am I tax-free for 10, 15, 20 years? And I always answer, anything that's new construction. I mean, in 2019, it changed, right? All of the tax brackets were brought down. So long-term, it's actually better. But that basically 10 or 20 or 15-year period, whatever it was, no longer applies. Like, there's no new construction that falls under that, correct?
Yes, that is correct. Those exonerations are for older buildings, like buildings that were built in 2009, 8. And that's also a big misconception in Panama, which is, I'll get to the newer building, to the 2019 tax reform. But what happens is, just a quick explanation on those exonerations. When you buy a property, if you buy a property, let's say for, I don't know, $500,000, you're gonna have an amount that's gonna be land and an amount that's improvement.
Okay.
So the exoneration is on the improvement or infrastructure amount, which is either 5, 10, 15, or 20 years. The land pays a 1% tax.
Right.
So that's where the misconception comes. And we get at least once a month somebody that tells us, well, when I bought the property 20 years ago, they told me I have to pay taxes. Now that I want to sell it, they're telling me I owe $10,000, $15,000 in taxes. So
surprise.
Yes. so that's where the exoneration parts come from. And not on the total amount. But for new constructions, no, that's no longer applicable. What's applicable is the new law that was passed in 2017, but started from 2019. And that basically brought down the property tax rate a lot. And it introduced something called, I like to call as main residence, which is basically, if you buy a property that you're living in, you have the option to register it as your main property. Whether you're living with your spouse, your kids, or by yourself, or with other adults that are not related. If you register that as your main house or your main residence in Panama, then your property taxes will be lower by a lot. Like at least about 30-40% you can cut off by doing that registration. And just to run down the tax rates, is if you have a rental property, or if you have a property that is not registered as your main home, the first $30,000 are property tax free. Then until $250,000 is 0.6%. Up until $500,000, the difference is 0.8%, and then everything over $500,000 is 1%. And then if you register as your main home, the first $120,000 are exempt. Up until $700,000 is 0.5%. And everything else is 0.7% over 700,000.
I love what you're talking about. I mean, I have people that will buy multiple properties, and we always recommend that they usually list their primary, like the most expensive property that they own as their primary, so that they get the best tax rate on it. But it's so fun running numbers with Americans, with running numbers with North Americans and Canadians and Europeans, because we'll run property taxes and they're like, oh, okay, that's what I pay monthly. And I'm like, no, that's annually what you're paying. Yeah. And I believe you also get incentive if you play it early, no?
Yes. So for example, if you pay the entire year, it used to be until February 28th. It was extended a couple years ago until April 30th. So if you pay the entire year in advance, you get a 10% discount.
That's so fun.
Yeah.
Which, to be honest, most international clients don't want the headache of having to remember to make quarterly tax payments. So, like paying at the beginning of the year, they do it anyways.
Yes.
So,
then one of the difference that a lot of them realize when they're in Panama is that the Panamanian tax authority is not gonna send a letter to your house saying that you have to pay. They might notify you afterwards once you have surcharges already. And then an important part of that too is when you buy the property, once the ownership is transferred to you, then you have to do an update in the tax administration so that it is registered with your email address. Meaning any tax collection, notice, everything is comes to you, because what usually happens is they will buy the property and the email in the tax administration is still the previous owner or the developer's email.
Got it.
But yeah.
Got it. And it's true that it's not reevaluated until there's a sale.
Yes.
Correct?
That is correct. So there's no, actually, funny story, there was last week a big protest, social unrest about that whole changing the zone of a property. That's if the government can reevaluate that to increase the value of your property, and then that will increase your taxes. No, that doesn't happen, and legally it cannot happen until 2034.
2034.
Yeah, so there's a law. I haven't seen it happen, but back in 2014, there was a big situation where the municipality wanted to do that. And then most of the country decided we are not going to have that. So they backed off from that. And basically what this says, the government, if, for example, private construction or public construction is done that, it's going to increase the value of an entire community, then the government could reevaluate the cadastral value of the zone, but legally they cannot do it until 2034. It was 2024 and 2022. They made a law to extend it for another 10 years, but I have not seen that in the practice. And yeah, like you said, if you own a property now, there's the only way that it will increase is if you sell it or if you do a permanent construction to the property, which is not as common, but yeah.
So there's still some time, 10 years. And a lot can change in 10 years, no?
And I expect they will keep extending. And that will most likely happen in areas where older communities where they're building or trying to develop and stuff like that.
Got it.
And then to piggyback on that, there's also protection for that, because if you register, we were talking about main residence before, if you register your home, the property as your main resident, then they cannot revalue it by law. Doesn't matter. No government entity can do the revaluation, or you as the owner cannot do it either, unless you request to remove the property as your main residence. Then you can request a revaluation. But once you're registered, once you register as your main resident, then nobody can touch it.
Which we've been doing a lot with. I mean, the Panamanian Golden Visa, the Qualified Investor Visa, is one of the few really good still permanent residency, almost immediate permanent residency visas in the world. So we've been doing a lot of those, which you get your residency, so then you can put it as your main residence. So unless people are just accumulating properties and properties and properties in Panama, which also happens, I mean, your first one with residency can be listed as your primary residence. Okay. So we went from the purchase, I think I went off on a detour here that I shouldn't have, but what would the next step be? Where else? What other questions do you get?
Another question is, if you invest in a rental property, what are your tax implications or accounting obligations in Panama? And it is basically, so if you're renting out the property, then by law, you have to file tax. So that's whether if you own it as an individual or if you own it as a company or as a private interest foundation, which is a very common legal entity to purchase in Panama. If you own it as an individual, the tax deadlines in Panama is March 15th. You can request a 30-day extension for the filing until April 15th. But important is that the extension is only for the filing, not for the payment. If you do have to make any payments. So that would be if you own it as an individual. And then you have to keep track of all of the rental income, all of the expenses related to keeping up the property, maintenance, expenses, property managers, commissions. And if you own it under a corporation or a private interest foundation, then you have to do the bookkeeping as a regular corporation. So every month you have to book your rental income, expenses, and also an important part of doing that is the depreciation. A lot of investors, when they buy, they think they have to pay taxes because they're earning rental income. But in Panama, you can write off the depreciation over 30 years. So a lot of properties, depending on the rental income, but a lot of owners end up not paying any taxes because due to the depreciation, then having a real small profit or a fiscal loss.
Is there also, I mean, are there like thresholds, like X amount, and the first X amount is taxed at this percent or not taxed? And how do those thresholds?
That is only for personal taxes. So personal taxes, the first $11,000 of profit are income tax free. Up until $50,000 is 15% on the excess of $11,000. And then everything over $50,000 is 25%.
Gotcha.
That's for individuals. For a corporation, it's a flat tax of 25% on the profit.
Which sounds pretty good for you Canadians that are getting up next to the 70% tax rate.
Yes, definitely.
So
so those are kind of your main obligations while owning a rental property.
So we talked about buying, we talked about renting. Can you talk us through the sale?
Yes, so that's another key aspect of owning property in Panama. There's a bit of a misconception that a lot of people, if you Google it online, if you talk to somebody, they might tell you when you're selling, you have to pay 5% tax. And there's no such thing as a 5% tax. That is broken down in, there's a 2% transfer tax and then a 3% capital gains tax. So the 2% transfer tax is basically 2% on the acquisition costs. Plus we spoke about revaluation earlier, but when you're selling, there is a 5% increase on the acquisition costs. Just for this specific tax. So if you purchase the property, let's say 2025, and you're gonna sell it in 2030, there's gonna be a 5% increase since the purchase date until the sales date. And you're gonna pay 2% either on that amount or on the sales price, whichever is higher. There's a 2% transfer tax. And then the other one is the capital gains tax, which is, you also have two options. In the first one, the 2%, you're gonna pay the highest, and the capital gains tax, you can choose the lowest. So the lowest is either 3% of the sales price or the acquisition cost. There's no 5% increase on that one. So 3% or 10% on the actual capital gain on the profit.
I love explaining that to people because it cracks them up when you're like, I get to pick, and you're like, yes, you actually get to pick.
So that's the benefit, and that changed in 2021. So that because it was prior to that, it was you only had to pay the 3% on the sales price, and if the 10% was lower than the 3% that you pay in advance, then you could request a refund. That could take an eternity to get back.
Forever. Just an eternal refund. So
it's important to make sure you're dealing with somebody that can do the comparison before you end up paying, because I've seen in practice clients have gotten to us, and when I look at the sales form, notice that they pay the higher tax, which is like
yeah, too late, but they gotcha. So I would also recommend highly, I mean, I love sitting down and running numbers with people. Like it's fun. It helps me sell, to be honest with you, because once you run the numbers, they're so much lower than what people are used to. And so I love going through like overhead costs, closing costs, all of this, like estimated taxes, those types of things. So I would encourage you, like, don't necessarily try and run them yourself. Connect with one of us. We're happy to help you run numbers to see if it makes sense for you, because it will be different than what they're used to in North America, in Europe, probably a lot lower, to be honest with you. But it's good. Like I said, I know the very basics of taxes here. Brought Derick because he knows much more, and I like to defer to the professionals in things, especially like taxes. But get in contact with us if you guys have like really specific questions. That's what we're here for. So we've gone through the purchase, we've gone through rentals, we've gone through sales. Am I missing anything?
Yes, another key part, so we talk about registering the property as your main residence. If you buy the property through a corporation or a private interest foundation, and it is your main home, you don't have any income tax obligations because you're not earning any income from that property.
Okay.
But there is an accounting obligation that started in 2021, which is basically you have the obligation to send to the resident agent or the lawyer of the corporation or the private interest foundation an simple annual financial report that states the value of the acquisition cost of the property.
Okay.
And if the foundation or the corporation earn any income from either a bank account or an investment. So that obligation you have to send to your attorney
Okay.
by April 30th of every year. And then they have to report to the tax administration that they have the accounting records for that corporation.
Okay. And you would normally see those, I mean, in structures with obviously like people looking for asset protection,
Yes.
people looking, or someone that has multiple properties, let's say, not just in Panama, but maybe Latin America. I deal with a lot of people that have like their US assets in a US foundation, and then you would do any kind of international in like an international foundation. And Panama has really, really like, I mean, the foundations in Panama you can do a lot with.
Yes.
You can do a lot with them. So I'm trying to think if we haven't covered anything else.
Those are the basics.
The main ones? Yeah, those are the basics. Well, thank you so much. I am going to give you a shameless plug before we get off of here. So Derick actually wrote a book. It's a perfect, I mean, it has bullet points, which I love. I already looked through it. Lots of bullet points, lots of graphs, and easy to use, easy to understand. And I believe you can get it on Amazon, no?
Yes, it's available on Amazon and on local bookstores in Panama.
Okay.
Also in my office as well.
It's called The Real Estate Investor's Handbook. Yeah. So I'm going to keep this one for me. But thank you so much for coming.
Thank you for having me.
I mean, and if you guys have more questions that we haven't answered, I'm sure some of you guys have pretty complicated tax structures. Get in contact with us. Put comments below. We are happy to answer them. I'm happy to connect you with Derick. And thank you so much for joining us today.
Thank you for having me.
Yeah.